Main reason why you keep blowing accounts is because you don't understand risk. You don't understand yourself and your relationship with risk. Are you afraid to take risk? Or are you a natural risk taker? See, this is something I've had to learn about myself over the years. And today, I can tell you that I love taking risk. To the point that if I don't control it, it becomes a huge problem for my trading. To control it, however, is easier said than done, as risk is quite a complex topic. So today, let's unpack risks together and see how we can understand it and harness it. Hey, I'm Pat. I've been trading for over 10 years. Started back in 2016 with CFDs and Forex, and been trading futures for the last 3 years. Throughout those years, I have traded both my personal capital and I've also gotten funded with multiple prop firms. First thing I want to talk about is risking too much per individual trade. After all, why risk only $200 if I have $2,000 to my disposal? Let's not be shy. The influencers that I'm watching are trading NQ on 1 minute chart and they risk $500 per trade. They're making so much money on stream. Why can't I do this? Influencers are not paying your bills. In fact, you're paying their bills by blowing multiple accounts and having to buy new ones. Why does it work for them and not for me? The main reason is they spend tens of thousands of dollars on evaluation accounts in order to get those handful of big payouts that you see in social media. Would you agree with me that if you're normal, your reality is a little bit different? That's why you have to take a different approach to trading. Next thing, we have taking too many trades without having a really good reason for each of them. It's also called reflexive trading or over trading. Oh, a big bar up, let me buy it. Oh, now it's covered by a red bar. Let me sell it. No, wait, Bloomberg is talking about crude prices about to go down. Let me sell. For those who are looking to trade, there is always a reason to buy and sell. You need to have a filter that specifies what the market needs to look like in order for you to take a trade, and whether it's going to be from a long side or the short side. Without that, we'll be all just sitting there pressing buttons all day long. Another aspect of risk in day trading specifically is not having a daily loss limit. I don't want to set a daily loss limit because I can make it all back as long as I keep trading. It's variance, it's not my fault that I lost. If I set a daily loss limit, I won't be able to trade, and I want to trade. The thing is, guys, that there are easier and harder days to trade. On some days, the price action will be easier for you to read, for your particular strategy and for your eyes to identify those different setups, and you'll have better results. Today may just not be your day. Leave it alone if you are at the point when you have done enough damage to your account, and come back fresh tomorrow. Believe me, guys, it's worth it. So those three things, which is risking too much per trade, taking too many trades, aka over trading, and not having a daily loss limit, are the biggest aspects of risk and why it's so hard to control it. But now, I want to dive a little bit deeper. Like, why are those things so difficult for us to control? First one, in my opinion, is not having enough respect to the prop firm accounts. Thinking that these accounts are so cheap, let me just risk everything, I can always buy another account. And it's all fine if you do that once a month. But when you get to the point, and it's so easy to get to that point because it's always another one. When you get to the point when you're purchasing 50 accounts a month, that $100 price tag for one account that looked so small when you were looking at it, at the individual level, becomes $5,000. When that happens, this account is no longer cheap. It's actually very expensive. Because if you took $5,000 and you put it on your personal account and you trade it with a smaller risk, you would have much better results. If you don't believe me that you can blow through 50 accounts in a month, yes, you can. If you're full porting it and risking $2,000 per trade or $1,000 per trade and not have a daily loss limit, you can blow through 100 accounts. It's easy. The volatility that we're seeing these days makes for a perfect environment for blowing accounts at scale. I can't tell you how many accounts I've blown in my career. Definitely more than I care to share. So be smarter. Set your risk parameters and stick to them. Another aspect is being in a rush. Man, if I'm risking $200 per trade, it's going to take me ages to pass this account. Let me risk more so I can get this funded account faster. Problem with this is that when you get to the funded stage, you're going to be trading this account exactly the same way as you did at the evaluation stage. you'll hear the prop firms tell you, oh, you got to the funded, just trade the same way and you get your payout. No, that is exactly what you're not supposed to do. If you're going to be trading in the same way, you're going to be in the endless cycles of passing evals, getting to funded, and blowing your funded account. You have to change your approach at the funded stage. If you manage to get to that funded stage by risking much more, drop your risk significantly at a funded stage. Because now, this is the time where you're actually able to make money from that account. So you don't want to give it up by being reckless with your money. Next is FOMO, fear of missing out. What if this is the trade of the day and I'm missing it? Look, gold just dropped $10. Let me sell it. Somebody must know something. Crude has been going down all night. I was thinking about a short last night, and if I did open it, I'll be sitting in so much profit right now. And whenever these or similar ideas start floating in your head, our hands, as by some magical power, just grab the mouse and drag the cursor over to the buy and sell buttons in our trading platforms. And the rest, you guys know how it goes. Then we have social media, and seeing all those trading influencers posting big payouts, telling us their stories of how they bought an evaluation account on Monday and getting a payout on Friday, how they passed the account in one day, how they are taking daily payouts from this and that account. Coming back to my point from the beginning of the video, you are the one that pays their bills. They don't care how much money they spend on evaluation accounts because they're making so much money from the affiliate links that they really couldn't care less how much these evaluations cost, how many they blow, how many times they get funded, how many payouts they get. Basically, they don't even need the payouts to work for them. You have to understand that, guys. They don't need the trading to work out for them because they always have the affiliate business to fall back on. And finally, the last reason is disassociating or finding excuses. We all heard that trading is hard. Everybody tells us, right? Trading is super hard. Trading prop firms is hard. Problem is when we start using that as an excuse for our bad trading. If we risk too much per trade, this is not because the trading is hard. It's because we couldn't stick to our risk parameters. If we trade without a daily loss limit and we blow an account in one day, well, it's not because trading is hard, it's because we couldn't stick to our rules and let that account sit after we've made a string of bad decisions. Everyone blows accounts, right? Influencers blow accounts all the time. That's correct. But influencers can spend hundreds of thousands of dollars on new evaluation accounts. They're going to get more free evaluation accounts from the prop firms for promoting them. So you have to really stop comparing yourself to influencers. And then the final one, I have to be okay with losing. Yes, to be a good trader, you have to be okay with losing. But you have to also be professional enough to understand which aspects of your trading you can control and which ones you can't control. You can control your risk, you can control how much you trade, when you trade, how long you stay in the trade for, and what kind of trades you take. Alright guys, so let's talk about the solution right now. Next time you buy an account, take the max drawdown that is available in that account, for example $2,000 for a 50K account, and divide it by 10. So now I want you to take that 10 and divide it by 5. Okay, that gives you 2. So 2 is the number of trades you can take per day. With this approach, you'll stay in the account for 5 days by taking 2 trades a day, and if you lose 2 of them, then that's going to be your daily loss limit. And in terms of profits, you want to aim to make at least 1 time or 2 times what you're risking per trade. So if I'm risking $200 with this strategy per trade, I want to aim at least $200 to up to $400. If you make $250, $300, $180, that's totally fine. But if you do, however, hit the $400, I would encourage you to stop trading for the day and log out from the account. Okay? Because that gives you an extra 2 days of potentially difficult price action that you can survive in the markets. And at this point, if you've been struggling with blowing accounts, I think survivability and how long you're able to survive should be the first thing for you to consider when you're trading. For those of you that find it hard to stick to 2 trades per day, go to a higher time frame. Look at 1 hour chart and tell yourself that you're only going to take trades after the 1 hour bar closes. That will drop the amount of trades you take and potentially help you take more quality trades by far. I want to make another video when I'll go deeper into this 1 hour strategy and sort of show you how I look at the markets and how I make my decisions, okay? But for now, this is all I got for you guys today. I hope it was helpful, and I would love to hear your thoughts, hear what you guys are struggling with. So please drop those down in the comments below, okay? But otherwise, have a successful day. If you guys are having a good day today, good for you, keep it going. Consider, ending the trading for the day and do something else. If you're having a bad day, consider also stopping trading for the day. Reevaluate yourself, look at your mistakes, and come back stronger tomorrow. Okay? Thanks so much, guys, and I'll see you in the next one. Bye.